In this video, traders, we're going to look at the 4-week trading rules strategy. Stay tuned. So what is a 4-week rule strategy? Basically, Richard Donchian came up with it, and then you may have heard of Donchian channels. This is pretty much where they came from. And I've got in front of you here now, guys, a British pound US dollar chart on a daily time frame. Now, a lot of people when using these channels start to meddle around with them. But in my eyes, the whole analysis that this chap did was based around the 4-week rule. The idea was that you would buy when price broke above a 4-week high. In other words, the highest it's been for the last 4 weeks you would buy, and you would sell or go short when price went below a 4-week low, i.e. the lowest point it had been for the last 4 weeks. And so the settings that should be used are a daily chart, 20 periods, being 5 days in a week, 5 times 4 giving you 20. When people start changing the settings, I think you go away from the whole research that Richard Donchian did. So let's just stick with it for now, and let's see exactly how it works. So, like I say, daily time frame. Of course, you can put it on a weekly and have the settings to a 4, so you've got a weekly chart, a weekly candlestick, but have 4 weeks to give you that if you wanted to. But I think daily gives you a better visual representation. So, obviously, as you can probably guess already, this is a trend trading strategy. The idea of this is once you break out of a trend, you're going to get on the end of a good move, and it's going to take you to new highs or new lows, whichever way you're doing it. Now, the obvious thing, and you're probably thinking this right now as you're watching this, it's like, hey, if I'm late to the party in this move, yes, the trend has started, but I've got a good chance of being whipsawed. Some of the stats are showing that this trade is only 30 to 40% effective, but when you get on the end of a move, you get on the end of a big trend. So if that's what you're looking for, if you're looking to get on the end of a trending stock, trending commodity, trending FX pair, perfect way of getting involved. However, you're going to have to be able to manage the risk and take a lot of whipping out before you get on the big one. So perhaps you can add a filter that suggests, hey, I think that this trend is changing. We've come a long way lower. We've had a catalyst now that's changed the sentiment on the stock, changed the sentiment on the currency, the country, the economy, whatever it may be. Let me use this 4-week rule strategy now based on the fundamental thesis and use that as a technical trigger. So let's have a look at some technical triggers and say we're going to do that. Let me clear off the drawing pen and let's have a look. So example here would be, let's get out of something. Let's not cherry pick too much because it's just going to look silly, aren't we? Here we go. 1 day chart, British pound. You think that this is starting to reverse. As soon as you hit the lower channel, i.e. that's going to be a 20-day low and easily marked out for us on the channel, that's when you initiate a short. Now you can see in this example how when you get on the end of one, it's going to run a long way. But you can also see how many times you're going to get stopped out along the way. So you've got to decide how you want to implement this. Is this something you want to take all the time? No, it's not. Is this something that perhaps you can use as a trigger to take when you think at the end of a trend? Yes, it probably is. So the idea of this is you sell short when we break the 20-day low, 4-week low, and you hold that for as long as you possibly can. Now, you can see how often you're getting false triggers to both the upside and the downside. And in fact, that's a great example of it working very nicely. But look at these examples here where you've gone to a 20-day high, but then immediately you've gone lower. So, you know, I'm in two minds about this, guys. I think that this is one of those things where, you know, if you're getting the break, it's one of those probably 4 or 5 down the list of things that I'd like to see. If I'm attempting to get on the end of a trend, let's say I'm looking at a stock that I think is turning around, like let's put Twitter up for example. You know, let's say I'm looking at something like this. I know there's a lot of gaps in some of these stocks, but it might be something you say, okay, I feel like we've broken out of a low. We're now at a 20-day high as well. We've got the 4-week rule strategy in play. Let me take it because that's just an added cherry on top. I think that the markets have changed condition a lot since this analysis was done by Richard Donchian, and so I think that the trending nature of markets has changed. Of course, we still get trends. Of course, you know, if you look at the cryptocurrencies, you look at some of the commodities, you're going to get these strong, brutal trends, and this is the perfect thing. If you can bolt this into a strong trending market, you're perfect. You're going to make many, many times your risk. But I think the markets have changed dynamic quite a lot, that this has got to be something that you've got to put into a strategy as part of a broader strategy. Looking at it exclusively as a standalone play is probably a losing proposition. And in my guess, I would suspect if you back tested it now and you went back and you said, hey, what's the probability of success with this? We back tested it, you know, for the past 5 years on 10, 15 currency pairs, 10 big stocks, I would suggest it's probably quite low. But it'll be interesting to know whether the ones that works out really undo all those small losses. I mean, I'm not a backtesting guy. If you guys have done backtesting on this, we're always interested to hear your results in the comment section below. But it's one of those things that's worth looking at, isn't it? It's one of those things that if you want to implement a real good big intra-year or larger trend change, you might stick up those Donchian channels, stick on the default setting of 20, and if you start to get those 4-week highs, maybe that's a trigger to actually get involved. Anyway guys, that's the 4-week rule strategy. The rule generally is when you're above that 4-week high, you're long. When you're below, you're short. Pretty similar to trading on those above or below kind of moving averages type things. Not necessarily something to stand alone, but a useful kind of filter that perhaps you can add to your trading plan. All right guys, take care, keep your risk managed. Goodbye.